I mean, obviously this depends on sanctions, but how much worse does it look? Can it get for the ruble, and when will the central bank step in again?
Well, oddly enough, right now there are corporate taxes that have to be paid, and then that has given it some support. But I think if we fast forward over the next 3 months, 6 months, and obviously it very much depends on the news flow, and if the tensions do remain, if the tensions do intensify, there is a very chance that we will continue to see those capital outflows. I mean, as you've said, that the government have already said there could be $70 billion in the first 3 months. That's bigger than the whole of the outflow for last year, and these outflows, because they've been going on since last year, really are going to mount up. So there could be a step up of intervention. That's a fairly normal procedure for the central bank. Whether or not they would have to do anything on interest rates, again, right now, luckily they don't have to consider that, but that would be quite painful further out because, of course, the slowing growth environment. So the outlook could be or could become quite complicated, but at the moment, at least, the ruble is getting some support from those tax revenues that do have to be paid.
And the World Bank, as I mentioned, to downgrade its outlook. How much damage can that have on an economy?
Well, again, I mean, that affects investors' risk appetite, but given that there are many other geopolitical events that are already hampering investor risk appetite, it's just another negative factor right now. But clearly, the outlook is not very positive at all, and it does show that even though the sanctions, some would argue, are still quite moderate, the business case, the business pressure on Russia really is quite intensifying. But of course, we can say that, but we've also got to remember that there are potential costs to the European economy too, in terms of energy. So this isn't just a one-way thing.
Let's talk about the dollar. Clearly, we're seeing further doubts now about the US economy. How much underlying weakness is there in the latest numbers that we saw yesterday, for example?
Well, I mean, you could argue and go back through some of these data recently and say, actually, there's a little bit of signs of improvement. But again, the jury's out. We really need to see over the next month or so better data to really give us a proper idea about how much of that weakness in the first few months of the year was weather-related. So over the next few months, we'll get a better idea of that. And of course, that's really very important because not only is it going to tell us how strong the US economy is, but it will really help us gauge when the Fed really can hike interest rates for the first time. Will it be in the middle of next year? Will it be the end of next year? I think that information is going to become a lot more clear as the spring progresses.
Where's euro dollar going now?
Well, it's interesting last week that the dollar did get that support from Yellen. We all know that the euro is an extremely well-supported currency, and of course the euro has been performing with safe haven characteristics over this year, and it's likely that a lot of the flows coming out of Eastern Europe are probably going back into Europe. So the euro well-supported, but the dollar, I think, still has the possibility to pull back some ground over the spring if we do get confirmation that the US recovery is on track. So I think we could end up the year lower, but I think that the euro is going to be very slow to give up ground to the US dollar.